You're watching live coverage of Budget 2022. This is ET Now, your budget headquarters. And with me is my co-anchor who needs no introduction. Been anchoring with her for over 10 years now. It's been a decade, Ayesha. We've been anchoring together.
It really has. And to think of it, all through the last 10 years, we've not really seen the market go anywhere, Nikunj, except the last one, right? Where you saw a 5% pop coming in on the Nifty.
So this graphic, in a sense, Ayesha, tells you that how the budget volatility over the years has actually come down. If I'm just going to, move and talk about the budget volatility, there you go. The budget volatility over the years, frankly, has got crushed. So while budget is a statement of intent, Indian budget is never a sideshow, Ayesha. It is always the indication of government which way they are thinking. Are they thinking at increasing taxes? Are they thinking at spending more? Last year's budget, Ayesha, has re-rated the perception of a budget. Clean budget, a budget like never before, growth oriented. There was no devil in the detail because there was hardly any detail. A short budget speech. Yeah. And as a result, the budget and the market volatility has come down. The challenge is, what do you do this time? Economy, it's a K-shaped recovery, post-pandemic. Fiscal deficit, if you cut it down, then what will happen to the rural India? It's too early to pull that liquidity funnel out. And then there is a challenge of global cues. Crude at $90.
That's exactly what I was also wondering. That much unlike the last year to now, what the government has is a sizable collection kitty. I mean, we just saw the GST figures, for instance, yesterday for the month of January. And it's a comfortable 1.3 lakh crore rupees that on a monthly basis that they've managed to crack. What the markets would this time want to know is, how is the government spending all that kitty that they have accumulated?
Smart expenditure. So let's actually look at the intraday swings for the market, and that in a sense is going to capture what exactly markets are betting on. That's how markets in a sense have moved over the years. And again, this is Morgan Stanley graphic, how markets have moved in terms of the MSCI outperformance and underperformance. Remember, the budget day volatility or the budget day impact normally will last for next couple of days, and then it's going to be back to global cues. But like Ayesha said, that what is important here is to understand that how the government would be spending, which way government would be spending, and what exactly they would be spending in terms of smart expenditure. So how do you create the multiplier effect, Ayesha? That is the most important aspect.
And when you talk about the multiplier effect, I don't think just increasing your rural spend would be enough.
Does the rural spend, free fruit grain, does that create a multiplier in the...
Clearly not.
Okay. Now that's the most important graph, Ayesha, and I'm just going to move slightly.
I'm just going to move back.
This graphic in a sense captures everything. Look at the crude prices. They were at $55, now they're at $90. And crude going to $99, we're just going to zoom out slightly to establish that graphic. What is also important here is that how US bond yields have moved. Now the US bond yields, Ayesha, 1.1 becoming 1.8 may look like, 70 bips. But 70 bips is more than 50% for the global bond market, which just tells you the cost of capital is going to move higher. So that is the biggest challenge. How do you keep the borrowing calendar tight when interest rates have gone higher and crude has gone higher? We are now we'll have to climb the mountain of macro worries. Unlike last time where nobody cared about fiscal deficit, it was about getting growth at any cost. Now it's about accelerating growth, but not at a cost. So we've survived the COVID. We've
now you got to thrive.
Now you have to thrive. Thrive is the word.
Exactly. Okay, I don't know if we can just quickly bring up what the SGX Nifty is currently up to and what the pre-open market rates are up to. Because remember, fortunately for us, in the last 3 days, you've seen a very steady recovery play out for the markets. Yes, FIIs are still continuously in sell mode. In fact, yesterday it was a neck and neck sell figure from FIIs, and the equal quantum was a buy figure from the DIIs. This morning, of course, you've got a very comfortable position when it comes to the global cues. Comfortable handover from US equity markets. Asia after a day's break because of the Chinese New Year. Most of the markets, remember, yesterday were not trading. So a strong comeback from Asia as well. And the SGX Nifty too was indicating a smart 1% kind of print for us. So there you go. Currently, as you can see,
the Baikata is out, Ayesha. The Baikata is out, and that's the finance minister. The budget document is in her hand now. That is the most important thing. You can see the budget document. That traditional briefcase is gone. Nirmala Sitharaman, well, I think she uses an iPad to read the budget, or she uses a tablet to read the budget.
She did use a tablet the last to last time.
Covered so many budgets with you, Ayesha. But all I can say that this is the budget where you can actually say that the government does not, they are not hungry for additional revenue. You know, it's a problem of abundance. And when was the last time in the couple of budgets we've tried together, there has been a problem of abundance.
Plenty.
That is the challenge.
Okay.
This is
All
the heat
eyes.
map, Ayesha. This is the heat map, which in a sense we feel is going to be very, very important. Those are some pre-opened rates, but we want to go back to the budget heat map. And Ayesha, let's look at this wall.
Yeah.
And this wall, in a sense, is going to be a crucial wall. I would say the dark horse for me, Ayesha, this budget is actually realistic.
Yeah, absolutely. You know, real estate. In fact, the market is also going into the budget with heightened expectations on what the finance minister is going to say about infrastructure, real estate, given the kind of multiplier that these two sectors have. Okay, these are a couple of budget-sensitive stocks then, Nikunj. And yes, you're seeing a green print on DLF right now, about 1.5% higher. You're seeing some of the crude sensitives also hold up. I can see Asian Paints, which is actually looking good by about almost 1.5% or so. Pharmaceutical as a sector, I guess there could be some, once again, and rightly so, some increased expenditure on healthcare and healthcare services.
So Ayesha, the big saving could really be the vaccine allocation.
Yeah.
You allocated about 30,000 crore for vaccine. That is unlikely to be repeating itself. So do you cut the expenditure down, or do you divert the vaccine money which you marked for last year's budget into more productive healthcare benefits? You know, India always needs healthcare. But tier 2, tier 3, will something really come from that aspect? For me, just for the benefit of our viewers, for those who are training in today, the fiscal deficit number is going to be important. Why? Because if the government says, I'm going to keep the fiscal deficit number closer to 6.5 or 6.4, that means they would be spending more. Consumer stocks and infra stocks will come back. If the government says we're going to be going back towards 6%, that means banks and industrials, or I would say financials, will do well. That means the government will follow a fiscal discipline. But the fiscal deficit number, in a sense, could be a mood impact, could be a mood indicator. But before I just give it back to Avan and to Nantara, and I just want to go back to that volatility graphic. And that volatility graphic, in a sense, really captures what the importance of the union budget has been over the years. Morgan Stanley has done this work brilliantly. I'm just going to move back because it's a very big graph, which in a sense will be capturing everything. And there you go. This is the true sum and story of everything we are trying to say. The budget volatility over the years has come down, but budget is budget.
Unfortunately, the pre-open rates on the Nifty right now are indicating a solid 1% move. I could see that SBI was holding up very, very smartly. PSU banks, remember, really hold the key. And disinvestment, Nikunj, we've been talking about it. That's really the dukti rug. So I just want to see what the disinvestment sensitives are up to, because like we were chatting, you were chatting with Madhusudan Kela yesterday, and we were chatting with him just this morning as well, Nayantara and I. I mean, he said if in this market they couldn't go through BPCL, then that really throws a question mark, right?
It's a problem.
I mean, we've had a roaring bull market in the last 2 years. The disinvestment juggernaut should have rolled off for now. So,
and the easy ones, Ayesha, I mean, SCI, Container Corporation, you could have gone through them. Those are great, fantastic businesses anybody would like to buy. More than divestment, Ayesha, I think the word privatization is important.
I was just going to come to that. I mean, is it really disinvestment that the market wants now, or after AI, they're like privatize?
Privatization, I think, is the word. Okay, now before we wrap, here's how the intraday volatility in a sense has moved. We are trying to get you as much market data as which we can over the years, and we have looked at last 30 years, what has been the average volatility for the market, and that just tells you that how volatility over the years has moved in terms of the market action. So I'm just going to give it back to Nantara and to Avan while we get ready for the market open at 9:15 with Ayesha.